This is the Best Stocks to Buy podcast. Looking for quality stock tips? Well, we bring you timely investment ideas based on the latest stock and market outlooks. Our ideas are driven by a proprietary software that reviews, analyzes, and ranks over 6,000 stocks every week. So you may hear the name of a company you haven't heard of before. And you know what? That is often the best kind of opportunity. An opportunity to get in early before the investing masses. The Best Stocks to Buy podcast is made possible by Conner Management Group, a registered investment management firm serving individuals, business owners, and family offices. Hi everyone, this is Mathis Conner with the Conner Management Group, and this is the Best Stocks to Buy podcast. Today is Monday, March 6, 2017, and this week we're going to look at the best growth stock to buy right now. And just to lay out the flow of this podcast, the first slide we're going to go through is the setup and the approach. Now, the key objective of this podcast is to present and find for you a high probability upside potential stock. And the key tool we use is a financial model, a proprietary tool I developed that uses multiple valuation approaches across 6,000 stocks every week. So the view you're getting is not driven by some sensational headline and some popular publication focused on increasing readership, but based simply on the best investment opportunity we could find. Now, an easy way of thinking about our approach is to think about the method of triangulation that law enforcement uses to locate a cell phone. In our case, we use a form of triangulation to locate a future stock price using different valuation methods. Now, here's a backdrop. Now, I truly viewed creating such a model as daunting, but I believe I was well prepared for the challenge. I have both computer programming experience as an engineer and over $15 billion of transaction experience as a finance guy to judge the research we reviewed. So my approach didn't come overnight. I painstakingly reviewed over 40 years of white papers, taking away the best that each had to offer, and then added some of my own tested intuition to implement new data sets that weren't even available as little as 10 years ago. And furthermore, my model uses both historical and projected values and takes into account management's historical accuracy of meeting the projections they share with the public. Additionally, a point worth remembering is that these views are based on today and an unforeseen economic report, a regional conflict, policy change can change these expectations tomorrow. And a general benefit of using a professional money manager like Conner Management Group is having someone experienced in making educated assessments about the uncontrollable, as well as having someone to readily share their opinion on whether a particular event is reason for concern. And now, so what did our model find for you this week? Well, the best growth stock to buy right now, we found it to be in the biotechnology industry. On to the industry overview slide. The biotechnology industry is comprised of companies that produce various kinds of medicines, and this industry can be quite volatile. Just to level set, here are the 10 largest competitors by market capitalization. Johnson & Johnson, Pfizer, Merck & Company, Novartis, United Health Group. Oh, that one's debatable whether that's true biotech company. But the next 5 are Amgen, Medtronic, Sanofi, AbbVie, and GlaxoSmithKline. Now, the growth drivers for the industry are pretty typical. Basically, you have an aging population. The good thing is you also have positive GDP growth, and the industry is predicated on just continuous innovation. So those are the 3 growth drivers: aging population, positive GDP outlook, and continuous innovation. What are the industry challenges? Basically, they're pretty straightforward. It's the uncertain political environment related to general drug pricing, which you've probably heard in the news, as well as the potential repeal and replacement of the Affordable Care Act. And now for the big reveal. The best growth stock to buy right now we found it to be a company called Celgene. Ticker symbol is CELG, and we see the 6-month upside potential at positive 27%. On to the quick facts slide. Celgene discovers, develops, and commercializes therapies to treat cancer and inflammatory diseases. Pretty straightforward, although there are a lot of cancers and inflammatory diseases, but that's what Celgene does. Their website is www.celgene.com. They're headquartered in Summit, New Jersey. They were founded in 1980, and they have 7,132 employees. Okay, on to the metrics slide for Celgene. The annual revenue, or I should say the revenue of the last 12 months for Celgene, was $11.2 billion. It's a sizable company. Their net income was $2 billion. And over the last 12 months, the cash from operations was $4.0 billion. Additionally, their operating margins for 2016 were just a little bit under 47%. And for 2017, they're tracking and expected to be 48%. So this company is very profitable, has some and a very strong balance sheet, which we'll talk about shortly. Now going on to the valuation metrics. The trailing PE ratio right now for Celgene is at 49.6, which is actually quite high. And the trailing PE ratio, however, is expected to be 26.1. And that means analysts expect earnings to increase quite a bit to move that from a trailing PE ratio of 49.6 to a forward PE ratio of 26.1. The PEG ratio is well under 1, which is great to see. It usually implies a value opportunity. The PEG ratio stands at 0.8. The price to sales ratio is at 8.6. The price to book ratio is 14.6. And the enterprise value to EBITDA ratio is at 25.3. The company does not pay a dividend, so its dividend yield and average dividend payout ratio are both 0%. On to the price chart for Celgene. Not surprisingly, the stock has been particularly volatile over the past 6 months. And this volatility especially stems from policy concerns on drug pricing, and when there was a general expectation that the Democrats would win the election, there was pressure on the stock, bringing it down, and then followed by the Republican win. There was great optimism, and the stock increased quite a bit thereafter. But we still see quite a bit of upside potential for the stock nonetheless. On to the next slide. We call it the looking back and looking forward. All right, looking back. Celgene's outlook is modestly uncertain due to congressional challenges on general drug pricing. Celgene's outlook is modestly uncertain due to yet to be announced changes related to the Affordable Care Act. Consequently, the stock has been volatile during the latter half of 2016. The company's year-end earnings were slightly lower than projected. This appears to just be a timing issue related to newly introduced drugs. And additionally, the company has a very strong financial profile. Now, looking forward, 2017 is expected to be a good year for Celgene as it benefits from the rapid growth of its pancreatic, breast, and lung cancer drugs. Additionally, the company's operating margins are expected to continue very strong expansion related to the growth of its new drugs. Although the drug industry is experiencing uncertainties related to government policies, Celgene looks like it will do well despite the potential headwinds. On to the next slide. It's called the Why Now, the Bull Rationale. Now, the reasons why we think Celgene is poised to go up strongly near term are for several reasons. Number one, increasing sales and revenues per share, decreasing expenses per share. We mentioned those very strong operating margins. We see low valuation metrics in the near future, Maybe not right now, but definitely in the near future, which makes the stock seem cheap. And additionally, the company is planning to buy back some of its shares, which typically puts pressure on the stock price to go up. So we're bullish on Celgene because of increasing revenues per share, decreasing expenses per share, low valuation metrics in the near future, and share buybacks. And going on to the summary slide, the financial statement quality for Celgene, as we mentioned, is excellent. The operating margin trend is improving, although it is already very strong. The price pattern trend, it's up but volatile, and this is a biotechnology company, so that goes with the territory. The industry outlook we see as flat, just due to the uncertainties of the market in general. And the overall market we're describing as positive. GDP is expected to continue to increase, to continue to stay positive, in that 2.5% range. And so we've and also interest rates are rising, which is indicative of a strengthening economy. The recent closing price for Celgene was $123.66, and our 6-month price target is $157, and that gives the company a 27% upside. And actually, we see quite a bit more upside even after the 6-month period. So for all these reasons, we believe that Celgene is the best growth stock to buy right now. We hope you found this presentation helpful, and we'll talk to you again soon. Take care. Bye. Hello, everyone. This broadcast was made by Connor Management Group. We are a registered investment advisor and money manager for individuals, businesses, and family offices. We are not your typical financial advisor in that we invest our clients' funds directly into individual stock positions. We do not put our clients into other stock mutual funds. At Connor Management Group, we help you grow and protect your assets. We craft high growth investment portfolios for your children and other minors. We manage the rollover assets from 401k accounts. We manage IRA and trust accounts. So how do we go about serving our clients? One big differentiator is that we develop some pretty comprehensive computer software that reviews, analyzes, and ranks over 6,000 stocks on a weekly basis. And from that, we create concentrated investment portfolios of well-researched and closely watched stocks. Furthermore, we operate under a managed account arrangement, and that means you open and fund a brokerage account in your name, and we simply manage your investments electronically. That gives you, our client, the greatest control and transparency possible. You can learn more about our service at www.connormg.com. Additionally, we've set up a group on the LinkedIn platform. The name of our group is simply called Stock Investing Tips, Better Returns, Bigger Pockets. Now, this is a private group, which means you have to click the Ask to Join link. We do this because we want to be able to control the quality of the member experience. So if you like what you heard and you would like to receive more timely investment information and be able to post questions, just send me a message to ask to join our LinkedIn group. You can readily find my profile on LinkedIn. It's Mathis Connor. That's MATHISCONNER. And if you have any problems connecting, just send me an email at mathis@connormg.com. Well, that's all for now, and I'll talk to you in our next broadcast, or hopefully with you in our LinkedIn group. All right, everyone, have a great week.